Ladies and gentlemen, welcome to the first Red Leaf podcast of 2026. We hope you have an amazing year investing. Now, we're super excited to have a cannabis company to be our first guest. Now, that company is called Little Green Pharma. The CEO is on board. Paul Long, how are you?
Hi, John. Very well, thanks. Thanks for having me.
Mate, always a pleasure. Now, Paul, for our viewers out there that are watching and don't know much about Little Green Pharma, uh, tell us all about it, the ticker, and what do you guys do?
Yeah, sure. Yeah. So ticker is little LGP, Little Green Pharma. So we are a vertically integrated medicinal cannabis company, originally headquartered here in Australia. We were the second company in Australia to get a license to cultivate and manufacture here back in 2017, from memory. A big focus for us was to try and deliver Australia's first locally grown product. So in August 2018, we executed on that strategy, and that sort of gave us that first mover advantage in the Australian market. We do cultivate in the southwest of Western Australia. We brought that first product that was locally grown into the Australian market. We built a really strong trust with both patients and doctors in this country, and we've expanded over time as the market has significantly grown. And then probably 4 or 5 years ago, we saw this opportunity where under our good manufacturing framework in Australia, if you produce a medicine in Australia under GMP, good manufacturing, then we have this mutual recognition agreement into Europe. So we saw that opportunity within the medicinal cannabis space a good 5 years ago now. And so we really pushed hard to try and get our products into those European markets, and we were pretty successful with that. So we were one of the first into Germany, early into the UK, one of the only products still to this date into the Italian market, the French market, the Danish market, and soon to be hopefully later this year the Spanish market as well. So yeah, the company then, once we looked at the European story, we saw an opportunity to make a big acquisition up there a number of years ago. So we purchased a very large cultivation, GMP manufacturing and laboratory in Denmark, just 2 hours from the German border, and that was a big fork in the road for our business. So we certainly had some doubters in this industry who want to be doubling down on cultivation, but we sit here today, a few years into that, and we certainly feel like it's well and truly justified that investment. The site we bought, a number of years ago for 20 million Canadian. The previous owners was a company called Aurora, a very big at that stage, multi-billion-dollar company in Canada. They had spent over north of $120 million on that site. So it is the biggest, it's really a gold-plated site. It's the biggest cultivation and manufacturing site in Europe. And now that we've seen this rapid growth, particularly the German market, UK market, and these other new emerging markets, we're sitting in such a great position with a fantastic asset. So yeah, we're a listed company. The industry more broadly has been in a bit of a difficult kind of time where investors looking at this space has been a bit challenging, but hopefully we'll chat a bit more today around why we think we're starting to look at that sort of changing up as well. So yeah, look, it's been an exciting journey. I've been with the company for 7 years, and been the CEO now for a number of years. So I think we've had some challenging times, but some very exciting times ahead.
So, focusing on the Denmark facility, which I believe is the largest medical cannabis production site in Europe,
Yep.
is the logic there you want to grow in Europe? Is that the market that we're targeting here?
Yeah, I think if we just zoom right out and say, 25 million people in Australia, how big is that market? We think maybe you get to 3 or 4% of Australians with a medicinal cannabis script. That's probably where you get the market. Maybe a bit higher if we can, execute well. But that's total for across the board for all competitors. And then obviously if you take that same approach and look at the European market, it's a much bigger opportunity. So look, for us, Australia is and will continue to be our foundation, but our results are now showing the investment we've made in Europe. We're starting to see some significant growth inside that European market. So for us, absolutely, like growing inside the markets in which we operate in are a really important factor to what we do. And shipping product in this day and age can be expensive. So for us, it's we can manufacture, we can cultivate, manufacture, test in Denmark, and like I said, put it on a truck, and in 2 hours we're in the biggest medicinal cannabis market in the world in Germany. So yeah, it like I said, we've we've had our doubters, but that location has now well and truly been validated.
Now, recently you made a major merger. Could you speak to us about that?
Yeah, absolutely. So, look, I think part of our clear strategy that we've been talking to the market about is pillar three of our strategy is around consolidation. And so that's been an active conversation we've been having now for at least a year, maybe a year and a half, with multiple partners in this space, not just in Australia. And so the conversation with Cannatrek was one in which we started a good 6+ months ago. Cannatrek are another pioneer in the Australian market. Fantastic business. They've been the number one company producing product inside the Australian market, just Australian focused, but they've been they've been really early movers to really understand the product cycle in the market, and they brought a product called Topaz, which is a flower product. For those who know our industry, it's the number one product in the market. It has been for a long time, and even today, it's number one, and then number two is only 50% of that volume. And we live in a world now in our industry where there's 1,500 products. So Cannatrek has always been, perhaps in a product sense, like a gold standard business in our industry. So for them, they've been focused on Australia and really driving the financial results. For us, it's been about investing in future growth in Europe. So that always has made a lot of sense. And then once we started conversations with Cannatrek a while ago, the synergies became even more clear. The cultural fit became even more clear. The opportunity to utilize, someone like Cannatrek, who have, not only these great product portfolios and a great brand position, and headquartered out of Melbourne, but they deliver real financial results in this space. So their pro forma, or sorry, their 2025 FY financial results were 75 million revenue and just over $10 million in EBITDA, and so delivering those sort of financial results combined with the opportunities we have in Europe was one of the most important factors to this deal making a lot of sense for both parties. So, and also in Australia, we're starting to see, that very competitive space at the moment. So for us, when we look at a typical evolution of any industry, we've gone through this big, entrepreneurial phase where all these businesses jump in, and there's a whole range of products, and we're now going through a bit of a shakeout phase, and that includes consolidation, both through consolidation like ourselves and Cannatrek, but also through just that natural evolution of businesses and not being able to compete. So, we're in that phase at the moment, and we think we're heading more towards a mature market. And like any mature market, like any other industry, we think 3 to 5 companies pick up 70 to 80% of the market. So we're certainly putting our hand up as a combined, we're probably number 3 or 4 in the market. They're number 1 or 2 in the market. We're putting our hand up as a combined entity to say, hey, we really do want to be the leading player and consolidator in the Australian market.
So now that that acquisition has essentially strengthened the Little Green Farmers balance sheet, what's the plan now? Are we going to invest in R&D, production scaling? It
Yeah.
sounds like you're moving away from growing via acquisition, so there's a focus on investing in yourself essentially to grow.
Yeah. No, we obviously announced the scheme document a few weeks ago. We still need to go through the process of shareholder votes and court hearings, and the completion date is set for 1 May, and
Yeah.
that's well and truly on track on the schedule. So we haven't yet sat down as a new board and said, okay, what is our direct plan for the capital investments? But obviously at a higher level, when we're looking at this opportunity, that's been discussed at a high level. But for us, there will be a continued look for consolidation in this space. We think the next 6, 12, 18 months will still be in a consolidation phase as an industry. So there'll be some really interesting bolt-on opportunities where we now have this vertical integration with supply, with manufacturing, with Cannatrek. They've got an amazing facility in Victoria to manufacture. Even just from a team sense, the sales and marketing combined team that will be able to deliver inside this market will bring scale and power. And so there might be some obvious bolt-ons when we bring new brands here in Australia. There might be opportunities inside the European market or more broadly internationally. So we will continue to have a strategy around acquisition, absolutely. But the initial plan for the balance sheet is the cash that Cannatrek bring to this deal is is a $13 million starting position, and then a pro forma EBITDA between the two businesses of at least 15 million or 13 million, sorry, which was pro forma FY25. So we expect to see some FY26 growth in that EBITDA position combined plus synergies. And so we think we're going to be in a very strong position to invest in growth. Now that growth will largely be in kind of two key areas. So firstly, and it's not a big investment, but firstly, our Danish site is we've taken it from what was, in many ways I described when we acquired the site of 1 out of 10, an amazing site in terms of the product it was producing and how it was being run. And I think we've done a really good job at getting it to a solid 6 or 7 out of 10. And with a little bit more investment, with just some simple additions like some under canopy lighting and some slight tweaks to the way we're drying, so we can process the post production flower to deliver higher quality product. I think we can get higher quality product and greater yield for some investment. So there'll be a bit of the use of capital there. But really the lion's share will be how do we, Little Green Pharma, have cracked the door open into these markets, and I can talk more about those if you like. The French market, soon to be the Spanish market, the German and the UK markets, Polish market. How do we invest in team and sales and marketing capacity to really make sure we can drive Little Green Pharma market share inside those brands? So we've been a bit hamstrung with capital to do that, and we've invested that in Australia, but to do that across 4 or 5 European markets it needs the capital. So that will really be the number one. How do we leverage those opportunities, the doors we've opened, to capture market share for the new combined entity?
So many investors are aware that the regulation environment is quite challenging in the United States. Each state has got their own rule, which makes it quite difficult. So
Yeah.
it kind of makes sense that you guys are focusing on Europe. Can you
Yeah.
speak to us on the regulation environment across Europe? Is it relatively the same amongst the EU states, or each country kind of different?
Yeah, really, really good question, because the simple, you would think with a harmonised European environment that you would get a fairly standard approach to what you can do there, but that's just not the case. So what we found in Europe is that each country has a different version of how they have viewed the medicinal cannabis framework. So we use someone like in Germany, started off very slow and specialist driven, and so a fewer number of scripts, but evolved quickly into a more broader GP access. And then over the last 18 months to 2 years, there's been, this evolution towards a more recreational market. Now, where it's landed at the moment is it sits in between. It's a bit of a quasi medical and recreational market, which works really well for us, by the way. But what they have done in Germany, again, the biggest medicinal cannabis market globally, what they've done there is they dropped THC as a narcotic. So it meant that sort of, that pathway to access the product was not treated like a narcotic, and it meant that the volume of scripts really increased significantly in the last few years. Now, there are some headwinds in Germany, and the regulatory conversation is one that's constantly one that we have to keep our eyes on, particularly because every country is the same. And I'll then just quickly give you one more example of the other end of that. We look at somewhere like France.
Mhm.
And so the French government decided, look, unlike every other country around the world, we want to run our own clinical trial with our own people, our French population. So they said, we will set up a clinical trial for 3,000 patients in France, and they tendered that out about 5 years ago now to the industry. We were one of the successful companies to win that tender. We've been inside that trial now for 5 years. The first 12 months or 2 years was free product, and since then it's been product that we've had reimbursement from the French government. Now, this year, so this calendar year, they will transition into a full medicinal open legal market. And so that market, very dissimilar to Germany, will be treated like a medicinal product, which means you've got to submit a full-blown pharma dossier to get a drug registration. So we're pretty close to submitting our dossiers, and we're confident we'll be one of the first products available on that market. And the reason why I point that out is that the competitive moat to being able to submit those dossiers is significant. Even in Poland, it's similar. There's only kind of, maybe 15 to 20 companies currently with products, compared to in Australia, you've got 150 and 1,500 products. And then the other big thing in France is it'll be fully reimbursed, and it will be a fixed price and set price by the French government. So if you think through that in a competitive sense, you've got product going to market that's going to be fully reimbursed, for the patient and a fixed price by the government. So the ability to go in and compete inside that market will be far more difficult than what we've seen in these kind of really open markets like Australia, Germany, and the UK. So yeah, they're all completely different, and that's part of, I think, one of our distinct, unique selling points as a company is that we do have that knowledge and intel, and we've built a really strong quality and regs team to be able to deliver on new opportunities in those emerging markets.
So, from the outside looking in, and I've been watching the cannabis market for a while,
Yeah.
I haven't noticed big pharma coming to the party yet. Is that a function of it's the regulations too hard in America and they're waiting for things to ease there, or the market's not big enough? What are your thoughts on that?
Yeah, it's probably a bit of both. They haven't come in a big way, but there's certainly some investment from big pharma in this space. They tend to The big pharma investment tends to lean towards the drug development pathway. So there's a number and not a huge amount primarily because of the US regulatory framework. There's not a huge amount of typical phase one, phase two, phase three clinical trials for cannabinoids currently globally. There's certainly a solid number, but not as you would expect for something with such a big market share. So big pharma are probably more leaning towards looking for full blown drug registration. That would be where they're heading. There's some investment. I think we're going to see more of that, particularly with some changes in the US. But we are also seeing kind of the big FMCG companies now starting to sit up and say, well, if it's heading down this quasi towards a more of a recreational market like what we've seen in Germany, if that begins to be the global trend, then it's more of an FMCG big investment that sort of comes in and eventually mops up the industry. But we're still in that. I think we're still in that zone where we're not mature enough yet. Like the industry will in the coming years mature, and then big pharma and big FMCG at that point will be the ones that really look to step in.
And I guess if when they come to the party, big pharma, they'll probably just take companies like you out. I'd
Yeah,
imagine.
absolutely. Yeah. I think that's clear. I mean, we've already seen that in outside of cannabis. You think, particularly on the drug development, often you get a company that gets there, phase two, phase three, and all the work's been done, investment's been made, and then a big pharma company comes in and just makes that acquisition and commercializes the product. So for those on a drug delivery pathway, I think that stands and is obvious for us. We Our investment has more been in market share and brand presence inside, firstly, really difficult medical cannabis markets, and they evolve to sort of more fast moving, and then the kind of natural evolution is to greater access through more of an adult use style market. But even if it doesn't get there, there's pathways and access. So that probably lends our potential acquirer at some stage in the future to more of an FMCG style business. But equally, I think what we'll see in the US is when obviously Trump has down scheduled to Schedule 3 now, meaning that once that actually comes into fruition, it will no longer be federally illegal, which means that just ease of business and banking and cross-border trading and international exports, and so all those US companies that have been sort of pent up, still doing some big numbers, mind you, for a number of years, they can expand their business cross borders, sell internationally. And I think what we'll see is a huge input of investment into the US companies. I think they're probably the obvious ones to once they do that, and their value is significant. They've raised capital. They're probably the ones to go, okay, how do we position ourselves in Europe and other parts of the world that are like Australia that are sizable markets?
And Paul, finally, and I always ask this as my last question, what do investors in LGP have to look forward to over the next year?
Yeah, look, I think for us, it's really exciting because we've got now built this foundation of particularly as the combined business of Cannatrek and Little Green Pharma, we've got this really solid, significant foundation now of a business that is actually pretty unique in its category, because I think we're asset backed. If you look at our net tangible asset positions, as Little Green Pharma, we've got 75 million of net tangible assets, and most of that's property. The same can be said for Cannatrek. So we're underpinned by that. Now we're underpinned by a strong financial position, which will be producing a positive EBITDA moving forward. So we're not going to be going back to the market for capital. That's clear. And then the growth opportunities for us are not Australia, we believe there's maybe single-digit growth in this market at best, but if we tap into the European market properly and we invest properly, and we look at the size of the market in Germany, UK, France, Italy, potentially Spain, and then some of the Nordic region, Polish market, we think there's some very significant growth opportunities there. The estimates on the growth inside the European market in the coming decade is around that sort of 30 to 33% CAGR. So if we can be inside that market, position ourselves well with the right capital, we see some really significant growth inside that market.
Right. Paul, we believe that you will deliver, and thank you for being on the show. Looking forward to seeing Little Green Farm becoming big.
Thank you so much, John. Cheers.
All right, mate. Have a good one.